So who was watching and paying attention? By the looks of the market reaction this week, not many. Well, let me sum up this week the best I can. Trump, tariffs, turmoil, and tantrums. It's very difficult to navigate these types of market conditions, but those few who watched last week's market update had an edge over the rest. Broadly speaking, this was the worst 3-day drop for the U.S. stock since December 2018 and the worst week of 2019. Okay, the past is the past. So where do we go from here? Well, let's take a look. Starting off with the value line geometric index, this is something we've talked about before. But as a reminder, this index is an equally weighted index using a geometric average. Essentially, the geometric average is close to the median stock price change and is another measure of the internal strength or weakness of the market. And as you can see by this chart here, the declining peaks of the geometric index coincide with the increasing peaks of the market. So in short, it means that the market moves on their way up have actually become weaker. And voila, you have the result this week. So now let's go to our charts. Again, this week we're going to take a look at two charts, beginning with the weekly chart, and this goes back to 2014. And again, we're looking at the spiders, the SPY. The close on Friday was 292.62. Now, I've already pre-drawn this wedge here, and this is what the good technical traders are going to be looking at. And essentially what they're showing is the increasing move of these tops here, but at the same time, the lows are getting lower. So based on this top here, where we did reflect pretty well right off of that increasing trend line, we reflected off of that, we're heading on down. So in a worst case scenario, this would be the result. A waterfall move all the way down to that level there. So again, that's the worst case. But let's go ahead and take a look at the rest of the oscillators here. Now, looking at the MAC, the fast line is moving down, has not moved through the slow line yet. We're still elevated here, and so there still is some strength, but with the move this week, it can move sharply through that on its way down. I don't think we're going to go that low there, but perhaps a move down to, say, that level there, which is still above the zero line, is possible. So we could move on down this way, which would make it a bad couple of weeks. Moving on here into the histogram, pretty much shows the same thing, that we are weaker with that move there, certainly on the way down. Again, price rate of change shows the same thing. The RSI as well. These are things that I talked about last week, so you can always go back and refresh your memory if you want. But there's really no need. And here, stochastic, same sort of thing. Volume, a little bit of a decline, at least in the last month or so. And so you have all of the ingredients for a potential drop in the market, and that's what we got this week. So moving back on up here, one last look at the price chart. Now let's go to the daily chart. And moving to the 6-month daily chart on the spiders, the SPY, we can see that we had the record level at that point there. And within the subsequent 5 days, we've moved off of that, certainly slicing through the 20 and then the 50 EMA to the point where we are at today. And based on trading of this week, I think next week and the week after, we're going to have some good days, but we're going to have some bad days as well. Looking here at the MAC, you can see that the MAC, the fast line, was trying to head on up through the slow line, and that was the concern last week. I don't like these formations, and it did get reflected off with that weakness and is accelerating on the downside. And the slow line will follow soon enough. But the fast line looks like it's going to head for that zero line and perhaps even pierce through that next week, the week after at the latest, I would imagine. And here to the histogram, we can see that the sell-off was in the works for quite some time, probably a month, month and a half or so. And you see that also echoed here in the price rate of change. And then in the relative strength index, we're at a 28.13. That is relatively weak, but we see that these tops are on lower, let's say lower lows on the way down. So again, no surprise, somewhat the same in the stochastics. The volume shows several sell-off days. And then here into the Williams, we do have a reflection in the Williams at this point here. But at this point, I think that's meaningless unless it starts to develop into something better. But I don't think that's necessarily going to happen given what we had this week. And I don't think any of the oscillators are showing any signs of basing or slowing down, at least at this point. So I think we just sit back and hopefully we are just spectators and hopefully we don't have a lot of money on the line here. Hopefully the investors in AbbVie didn't buy all in. It's possible that you're going to get some better prices coming up, as well as with spiders and many other stocks. So hold that dry powder for a better day to deploy it. And we'll hopefully know when that comes as we continue to watch this. So for you that are new to this channel, we'd love to have you. Please subscribe. And for today, that's ChewDog Charts. Thank you.